And welcome back to another edition of Fantasy Stockball with New Level Investment Management LLC. Week 14, and for some of you, your playoffs have started this week, so we're going to try to give you a really good lineup with some really good players to help you win those games. And more importantly, we're going to try to give you some really great stock tips. So first up, let's get started. We're going to give you our QB, running back, receiver. Our QB for this week, we're going to go with Russell Wilson. He's going up against the Green Bay Packers defense, and this has turned into a really great rival under the Russell Wilson era. So I look for him to have a really big game. They're fighting for their playoff lives as well as Green Bay, so this should be an excellent game. And I'm going to compare Russell Wilson with Discover Financial Services, the credit card company. And I just think this is a really good play. Russell Wilson is that value type quarterback, may not go in the first round and, in the fantasy drafts. And similar to Discover, it's one of those forgotten companies, right? We all think about Amex and, of course, Visa and MasterCard, and Discover card is that, that card that's screaming, hey, don't forget about me. And I'm not forgetting about Discover at all. It's still a relatively cheap company, although the financial industry has taken off to the upside. With the possible rate hikes from the Fed, these companies have really ran, but I still think they have legs. It's trading around a little under 14 for their PE, so it's still value compared to the overall stock market, which is hovering around 23, 24, somewhere in that PE ratio. And this company has a pretty good dividend payment. They pay about $1.20 per share throughout the entire year. Now the yield has shrank because the stock has appreciated, so that's going to decrease the yield. But it's still a really good company, healthy balance sheet. I look for this company to continue to roll, especially with the Feds possibly raking those hikes, upping the hikes and the Fed funds rate. Next up, we're going to give you our receiver for this week, and we're going to go with Mike Evans from the Buccaneers. He's going up against the Saints, and their defense has been bad all year. This is going to be a shootout. I think Wilson and Mike Evans, one of the top duos as far as quarterback and receiver. I think he's going to get in the end zone probably twice, have a really big day receiving yards wise, and I'm going to match him up with Shoe Carnival. One of those companies that you're not familiar with. It's a small cap, which means that their market cap is a little under $600 million. $600 million. So to me, it's a really easy takeout candidate, right? Like Amazon was buying up shoe companies a few years back. Not saying Amazon's going to buy them here, but if anyone wants to get into the shoe game and kind of bolster up their shoe portfolio, I think this could be a decent company from a takeout target. It's trading around 19 times earnings, which isn't cheap. But again, the overall market's around 24, 25-ish. So I think there's some value there. They do pay a dividend. It's under 1%. But they did announce in their recent quarter earnings that they're going to invest about $50 million worth of stock buybacks. They're also going to increase their dividend. So I do think there's some value there, but most importantly, it's a small cap. So I do like the fact that it's an easy takeout target. That's why I'm comparing that with Mike Evans for this week. And last but not least, our running back for this week. That's going to be Matt Forte, the Jets running back, going up against the 49ers defense. And I think both teams have packed it up quite naturally, but I still look for Matt Forte to run hard, catch the football out the backfield, have a solid game against that banged up, horrible 49ers defense. So I like that matchup. And I'm going to compare him with Citigroup. Again, I think Matt Forte has always been, since he's been in the league, one of those value running backs, right? And Citigroup, again, a financial stock. These companies have been beaten up for the last almost 10 years, ever since the financial crisis, right? Bank stocks have been on the brink of bankruptcy and all that good stuff. So although it has run pretty rapidly in the last, maybe say a few months or so, I still think there's a lot of room left for these financial companies to run. Citigroup, again, is cheap from a price earnings ratio standpoint, trading around 12, 13-ish. But net interest margin, they're number 4 ranked in the big banks for net interest margin. It's around 3.42, and with the Fed possibly raking in December, and then probably 3 to 4 times in 2017, you gotta love these financial stocks. That's all we have for you this week. New Level Investment Management LLC. Have a great one.